Welcome to your Mortgage Insider Update for August the 12th. We have a slow start to the week, but it's going to get busy starting Tuesday with the Producer Price Index and Consumer Price Index coming out on Wednesday. So keep an ear out for news coming out this week. Hopes to see steadier, lower inflation, which will keep us in line with the projection that the Feds will start to cut the interest rates come this fall. So let's take a quick look at the charts. We'll start this week off with the 10-year Treasury maintaining below 4% at 3.92. It has been lower than that. As we can see, we dipped back at the very beginning of August. We remember the unemployment report came out first Friday of the month where we saw this big dip in rates. Didn't see a lot of follow through, so we seem to have hit that bottom and bounced back up, starting to form a little bit of a range. And we can see that that range has carried forward from what we talked about at the beginning of the year when rates were last at this level below 4%. We saw the dip back at the very end of December, and then for most of the year, we spent our time above the 4% level. So pretty substantial to make it here. With the CPI and PPI reports coming out this week, we could see some follow through back down into the lower levels, which could project the maintenance of lower interest rates into the near future here. But any pullback or rise in the month-over-month inflation could cause a little bit of a blowback after seeing these lows. Going to the mortgage-backed security prices work in the inverse of interest rates. So we can see that the price is actually up right now. This has been vacillating just this morning. We've seen it just in the last few seconds here, both down and up. So all in all, relatively flat, 9 basis points is definitely an improvement. Similar to the time period we just previously looked at, the levels in the mortgage-backed security prices have not seen these levels since the end of December 2023, other than a few little times we tried to touch it. But for the most part, those prices have been down. So the price to the investor goes down as the interest rate to the consumers goes up. So this is a positive sign. The inflation numbers giving us a positive read on the projection to mortgage rates into the future. So have yourself a great week as you get back into the swing of school starting, and the fall is approaching with just right around the corner to Labor Day. Have yourself a great one. Bye-bye.